of Intyllus Advisors. We are going to be talking this afternoon about the way to maximize the use of and forgiveness of Paycheck Protection Program loans. I want to thank everybody for joining us. I want to thank especially Source1 Solutions for enabling us to present on this topic. Hopefully everybody will find the information helpful. This is an area that continues to attract a lot of really intense attention, both among law and accounting practitioners, as well as just general public. There's been a lot of stories in the press about this program, as well as a lot of developments. We continue to get new guidance on this on an almost daily basis. A couple of housekeeping notes that I want to just go over before we start the presentation. Everyone who is participating today has been muted, so it will just be Suhas and myself who are speaking. However, if there are questions at any time, you can ask those questions by using the chat function in the webinar. Depending on your screen, it's generally at the bottom of the screen in the little text bubble or chat bubble. So feel free to use that, and we'll try to answer questions as they come up, and hopefully that makes this a bit more interactive. This program is being recorded, and we hope to make the recording as well as the materials available to everybody probably in about a day or about 24 hours. It should all get sent out to everybody. So with that, I'm going to launch into the program. And again, as I said, if there are questions, please feel free to ask them in the chat button, and we'll try to address them. So let me just say, even before we really launch into the slides, this Paycheck Protection Program is one of the centerpieces, really, of the $2.2 trillion CARES Act, which is the stimulus bill enacted in response to coronavirus and the economic disruptions in particular that are caused by the pandemic. The program is for employers with 500 or fewer employees in just about every industry, with a few kind of minor exclusions here and there. And so one of the things we're going to be talking about as we go through the material is for businesses that applied for or even received loans, what are some of the things that you need to look out for which might in fact make you ineligible for a loan, notwithstanding that you thought you were eligible and had received one. And as we'll talk about, that is actually an area that has continued to evolve even after loan funds have been dispersed. I will say as well. So
Ivan, so I think when you talk about that, I just want to bring up an example where an employer had 449 employees residing in USA, had about 80 employees residing outside the United States. In the beginning, there was no guidance or clarification whether for counting 500 employees, whether people residing outside USA should be counted or not. But now it has it's come out. SB has completely come out and said it that when it comes to eligibility of PPP loan funds and borrowing, you have to count all the employees wherever they may reside.
That's correct. And in fact, it was worse than they just didn't say anything, because they said something that was very confusing and ultimately misleading. They had come out with guidance that said the test is whether or not you have more than 500 employees residing in the United States. And so some employers said, for example, if you had 400 U.S. employees and 400 non-U.S. employees for a total of 800, that employer, I think, reasonably said, well, we're eligible because we don't have more than 500 employees in the United States. And that was consistent, arguably anyway, with what the SBA had said at that time. Now, just within the past few days, they've said, well, actually, what we intended to say was if you have more than 500 employees, you are, generally speaking, ineligible. But because we acknowledge that we sort of misstated it in the guidance or made it confusing, for those borrowers who applied for and received loans prior to the date of that guidance, which I think was May 18th,
Right.
we will not disqualify you for the fact that you have more than 500, as long as not more than 500 in the United States. So it's a great point, and it just kind of highlights, and this will come up probably again and again as we're talking, but it just highlights the nature or the how this program, it's really just the rules are seemingly being made on the fly and are changing, almost on a daily basis. So I want to start by with that background, I want to start by just talking about, in general, how can Paycheck Protection Program funds be used? And there's only a handful of items that these loan funds can be used for, and those are payroll costs, and we'll talk in just a minute about what goes into payroll costs or how that's defined, mortgage interest, rent payments, utility payments, interest payments on other debts that were incurred before February 15th of this year, and then refinancing certain SBA economic injury disaster loans. EIDL loans they're another SBA loan program, and they can be used for, somewhat different purposes than a Paycheck Protection Program loan. But what the SBA has said is that if you applied for and received an EIDL between January 31st and April 3rd of this year that you plan to use or have already used for the same purposes, meaning payroll costs, that you must refinance that loan because, understandably, the SBA does not want to make two loans to the same borrower for exactly the same purpose. So the text of the CARES Act actually suggested that loan proceeds could be used for other purposes, but the SBA and the borrower application form have made clear that loan funds can only be used for those purposes. And further, the SBA has said that at least 75% of the loan proceeds have to be used for payroll costs, or to put it another way, not more than a quarter can be used for non-payroll costs. There has been, there's a piece of legislation called the HEROES Act that's been passed by the House that might change some of those requirements. For example, it says that it eliminates the 75% requirement. I believe that it also extends some of the time frames that we're going to be talking about and tries to give businesses more flexibility to use loan funds, within different time frames or for different purposes. However, that piece of legislation has not been enacted yet, and it doesn't appear all that likely, at least right now, that it is going to be enacted in its present form. Borrowers are subject to penalties for knowingly misusing their PPP loan funds. This was a topic of huge concern to borrowers. I think it was a couple of weeks ago now that the Small Business Administration, after initially saying that just about every business with 500 or fewer employees and some with more than 500 were eligible, there were some articles in newspapers and so forth that indicated that some, very high-profile companies, very profitable companies, some publicly traded companies had been able to get these loans. And so in response to that, the SBA said that it did not believe that those borrowers were necessarily eligible. And the reason is that there's a certification that borrowers are required to make. And the certification is that the loan request is necessary to support the ongoing operations of the borrower. And the SBA said that, in the case of a publicly traded company with access to capital, or even a privately traded or privately held company with, that is owned by a profitable business that has the ability to inject more capital, that they likely would not qualify. And I think that caused a lot of concern among borrowers, about whether they should return their loans, whether they might be liable for civil or even criminal penalties if they took a loan. Fortunately, we have some relatively forgiving guidance that came out last week in which the SBA says that for loans of under $2 million, they're going to presume that certification about the loan being necessary, they're going to presume that certification was made in good faith. And for loans of more than $2 million, the SBA says that it will audit all such loans when the borrower applies for forgiveness. And if the borrower, or if the SBA rather, determines that the borrower didn't have an adequate basis for making the certification, they may ask the borrower to repay the entire loan. But that being said, civil or criminal penalties generally will not apply so long as the loan is repaid and barring, a knowing or purposeful lie or misstatement on the application.
So, Ivan, the way I read it with the changes in all the guidance, that only in the most egregious circumstances they would go after civil or criminal penalties, but an unintentional mistake or something, I don't think SBA or Treasury is going to, or DOJ is going to go after civil or criminal penalties.
That's my interpretation as well. I think barring, sort of outright fraud or a knowing misstatement, I think the concerns about civil or criminal penalties are the likelihood of that is just extremely, extremely remote.
But there is a concern. But there is a concern even there now, where borrowers have received big dollar amounts. That there's a concern here because there is already freedom of information lawsuit going on, where certain media people want to publish the name of all the companies that are receiving money, and I think there might be a public shaming. And I have heard of some borrowers, to avoid that publicity or public shaming, even though they may have received the money incorrectly, are returning the money back.
Yeah, I've heard the same thing. I think for some companies that are maybe sort of on the fence as to whether or not they need the money, I think there is, depending on the unique circumstances or the industry that they're in, there may be a kind of a reputational risk that you have to consider in addition to everything else about whether or not you're eligible. It's just, is there some reason why reputationally it would look bad to accept one of these loans?
I have had borrowers that have said, I have heard of borrowers that have said that now that the expenses that are eligible for forgiveness are not deductible, borrowers have said that it's not worth it for them.
Right. Yeah, and that's another point. We'll talk about that in just a moment. So, obviously, the headline with respect to these loans in many ways is that if they are used for certain purposes and during the applicable period, the loans can be forgiven completely, meaning they effectively are converted to grants. And that amount is going to be excluded from the borrower's gross income, meaning, in the ordinary case, when a borrower has a loan forgiven, there's typically income that's included called cancellation of debt income. That's not the case here. However, as Suhas just mentioned, the IRS has come out with a notice saying that in their view, borrowers cannot deduct expenses that they pay using their loan proceeds to the extent that the loan is later forgiven. So if I receive a loan for, $100,000 and I use that $100,000 to pay my employees during the 8-week covered period, and then that $100,000 is later forgiven, the IRS position right now is that I cannot deduct that $100,000 payment. The theory of it is that would be a double benefit because I'm getting the money tax-free and then also claiming a deduction with respect to it. That's a very controversial position. There's some in Congress who've said that that's not what they intended, and I believe there are at least a couple bills that have been introduced that would legislatively overturn that result. That being said, the amount that is eligible for forgiveness is up to the entire amount of the loan and all accrued interest, provided that it's spent during the 8-week covered period. The covered period is defined as the 8 weeks beginning on the date that the loan is dispersed, although as we'll talk about in just a second, the forgiveness application that just came out from the SBA actually takes a somewhat more forgiving approach. But the money has to be spent during that period only on certain expenses, which include payroll costs, payments of mortgage interest on mortgages that were entered into before February 15th of 2020, rent under leases entered into before February 15th, and then utility payments under utility agreements also entered into before February 15th.
So if I may, on the payroll cost, expand a little bit. Payroll cost includes and consists of and includes gross compensation that an employer pays to the employee, plus any qualified group health plan expenses of the employer, also any qualified retirement and pension cost of employer, and any state unemployment taxes that an employer pays. Now, it is important to understand it's a gross compensation that qualifies for forgiveness, and gross compensation concept is different than taxable wages or Medicare wages. For example, if a salaried employee is getting $1,000, is getting a gross compensation of $1,000 a week, and from that $1,000, let's say employer is deducting $50 for Section 125 group health insurance portion of employees' cost, and also deducts another $100 for employees because the employee has elected a 401k reduction. In this case, for the purpose of PPP loan as well as for forgiveness, it's the $1,000, the gross compensation, that qualifies. Go ahead, Evan.
Right. Well, I was going to say is that, so there's also a question, first of all, let me just say a couple of things. So one is to notice that the list of items that qualify for forgiveness is somewhat narrower than what would qualify for, an allowable use in the first place. So, for example, if you use loan proceeds to pay rent under a lease that was entered into after February 15th, that's an allowable use of the proceeds, but it's not going to qualify for forgiveness. Likewise, 75% of the forgiveness amount has to consist of eligible payroll costs, and again, to put it maybe the opposite way, no more than 25% can consist of non-payroll costs. Now, what's really interesting is I think it was late Friday of this week, we got the loan forgiveness application that the SBA is asking borrowers to use when they go and apply for loan forgiveness. And I think that, to some extent, I think I said a moment ago that in order to qualify for forgiveness, all of these items, including the payroll costs, have to be, we thought, both paid and incurred during the covered period. So, for example, if you received a loan, if you received your Paycheck Protection loan on May 1st and you ran a payroll on May 2nd for the previous 2 weeks, I think our thinking initially was that very little, if any, of that payroll would qualify for forgiveness, but because it was related mainly to costs that were incurred prior to your 8-week covered period. I think that the guidance or the forgiveness application that came out just a few days ago is actually very borrower friendly and seems to suggest that you could, in fact, claim forgiveness with respect to that payroll, because they seem to take the language in the statute of paid and incurred and in a lot of ways read it as paid or incurred. And I know, Suhas, you and I have talked about that, and you had a concern that perhaps they'll even change that interpretation or change the forgiveness application because of those questions or ambiguities.
Absolutely, because it seems to me that while they have added clarity on the back end of the 8-week period, because in one way they have done a good job of removing the confusion about paid and incurred and paid on the back end of the 8-week period. But when it comes to the front end of the 8-week period, I think they have actually the instructions are completely contradictory to what the law says. And my concern here is that with this new application, what the application has introduced is a complete two concepts. One, we always knew what the covered period means, but they've added another concept called alternative payroll covered period. And the spirit was to try to simplify for borrower calculation of payroll cost, okay? Because alternative covered period should coincide with the payroll period of a biweekly or a weekly employer. But what they've also done by adding this terminology of incurred or paid is, to me, it seems like that if somebody chooses alternative covered period, they would be eligible only for forgiveness of 8 weeks. However, if an employer chooses 8-week covered period rather than alternative payroll covered period, they may end up getting forgiveness of an amount which is for a longer period than 8 weeks. And I'm not sure that was the spirit, but right now on the front end they've added confusion, and my sense is that they may come back and later on change the instructions, because in my opinion, right now the instructions are contradicting the actual law of the CARES Act. Right.
Well, and for example, they
have certainly removed the confusion on the back end of the 8-week period, whether it's alternative covered period or just a covered period. On the back end, they have removed the confusion, because they are saying that whether payroll cost or non-payroll cost on the back end, which covers which is a part of the 8-week but paid after 8 weeks, as long as the employer pays within the normal cycle, would still be considered eligible, even though it is paid after 8 weeks. So they've removed the confusion on the back end.
Right, that's exactly right. So, for example, if your 8-week covered period, let's say, ends on June 20th, and then you run a payroll on June 22nd that covers that period, all of those costs get included. And likewise, if your next rent payment is due on, say, July 1st, that should be included as well. But I agree with you that I think there's still a lot of questions, even with this forgiveness application, that I think people are, in some ways it's positive, because in some ways it's very borrower friendly. But I think there is still a very substantial amount of confusion about exactly how to fill this out and what borrowers are entitled to.
I agree.
So I want to talk next about an area that's maybe created the most confusion as far as how this is going to be applied technically. And fortunately, we have some additional clarity on this topic as well. But this relates to businesses that are applying for loans and have received loans and are applying for forgiveness, laid off employees or cut employee salaries during the covered period or shortly before. So what the statute tells us is that a borrower's forgiveness amount is going to be reduced almost in a mathematical or automatic way by multiplying the forgiveness amount by a fraction. The numerator is the borrower's average number of full-time equivalent employees, and Suhas will talk in just a second about what that means, and the denominator is the lesser of either the borrower's average number of full-time employees between February 15th and June 30 of last year, or its average number of FTE employees between January 1st and February 29th of this year. The borrower, generally speaking, can pick whichever of those periods is more favorable, meaning whichever they had fewer employees. So, for example, if the borrower, let's say, was otherwise entitled to $1 million of loan forgiveness, during the covered period they had, on average, 90 full-time equivalent employees, and during the testing period they had 100, they would be entitled to $900,000 of forgiveness, or 1 million times 90 over 100. Suhas, can you talk for just a moment about the clarity we got with respect to full-time equivalent employees?
Sure. So throughout this PPP loan program and forgiveness of PPP loan program, okay, the term full-time equivalent employee is used. And both for the purpose of a calculation of loan forgiveness as well as reduction of loan forgiveness, term FTE, full-time equivalent employee, is being used. Before the loan application forgiveness application was rolled out last Friday, there was a confusion as to how to calculate FTE, and there were difference of opinion whether 30 hours a week is considered to be a full-time employee, or is a person working more than or a person has to work 40 hours before a person can be considered full-time employee. The loan application that came out, forgiveness of loan application that came out last Friday, makes it clear that in order to be considered one full-time employee, a person has to work for that week for 40 hours. If a person is working less than 40 hours, let's say a person is working 30 hours in a week, then that person in general would be assigned a value of 0.75, which is 30 divided by 40, which is 3/4, meaning 0.75. However, good thing about this new application, loan forgiveness application, is that it does offer an employer and a borrower a chance to simplify the calculation of FTE, because it makes it very clear at the election of the borrower or employer that if anybody working more than 40 hours would be considered one FTE, anybody working less than 40 hours, maybe it's 20 hours, maybe it's 10 hours, or it may be 30 hours, could be assigned a value of 0.5. And that way, for each employee, the employer doesn't have to go through a whole calculation process. As soon as an employee for a particular week works less than 40 hours, could be just assigned an FTE value of 0.5. So that is a good news in this application, that this application has absolutely, in certain respect, made things better and guidance clearer.
Right. The other thing that the forgiveness application really clarified, and that I think made a lot of people, a lot of people were very pleased to see this, was that, so the statute by its terms says that a borrower's forgiveness amount is reduced to the extent that employees' salary or wages are reduced by more than 25%. But the way the statute actually writes it seems to be, to me anyway, is just a clear error. What it says is that you look to the amount that you pay the employee during the covered period, which again is 8 weeks, and then you look at the amount that was paid to the employee during the prior full quarter, which is 13 weeks. And they say if it's more than 25% less, then you have to reduce by the difference. Well, the problem with that is that unless you've given an employee a very substantial increase in pay, you will always have an employee who earns more than 25% less in 8 weeks than he or she did in 13 weeks. So fortunately, the forgiveness, and yet, I will say, and yet, I think people were struggling with that. I know of some either attorneys or accountants who looked at the statute and kind of said, well, it's pretty clearly what it says, and unless we're told otherwise, we think that's the way we have to apply the language. Well, fortunately, the forgiveness application says that you are only required to reduce forgiveness amount if you have reduced the salary on an annualized basis or wages on an hourly basis of employees by more than 25%. So if you have an employee who is earning the same hourly rate or the same annualized wages, there's no reduction in forgiveness amount. And in fact, there isn't one unless they've been reduced by more than 25%. We've heard a lot, just in the media about, all kinds of, businesses and companies, large and small, that are cutting their employees' salaries or cutting their wages by, it varies, of course, but, I think what we now know is that, if you have a PPP loan and you reduce your workers' wages by less than 25%, you will not have a reduction in forgiveness amount. You may still end up not qualifying in full for forgiveness because it may be the case that between perhaps having furloughed employees and between, paying less wages to the employees who are still working, it may be that you can't spend the full amount of your loan in 8 weeks on covered expenses, but there won't be an automatic reduction if you haven't reduced salaries or wages by more than 25%. And then there's all. Go ahead.
No, so I would just no. You go ahead. Finish the wage reduction.
Well, I was going to say. Yeah, and then I was just going to say there is also kind of an exception to the exception, and Suhas, perhaps this is what you were going to start to talk about, but it says that if the borrower reduced its average number of full-time equivalent employees or reduced the salaries of employees who earned less than $100,000 by more than 25% between February 15th and April 26th, and if those reductions are eliminated before June 30, that the automatic reduction does not apply.
So I want to address one thing here. So before the loan application came out, we were not sure how to calculate reduction in loan forgiveness, because we have two types of reduction in loan forgiveness. One is loan forgiveness is reduced when employer imposes salary reduction in excess of 25%. And secondly, the reduction in loan forgiveness happens when FTE count during the covered period goes down, okay? But the loan application makes it clear is first you calculate your tentative loan forgiveness amount based on the expenses you have incurred and paid during that 8-week period. Having calculated that tentative loan forgiveness amount, first you have to reduce that loan forgiveness amount for having imposed salary or wage reduction and come to an amount of forgiveness which is reduced for salary wage reduction. And that net amount is then, to that net amount, you further apply a reduction for FTE calculation, FTE reduction. So the calculation is first, you reduce your loan forgiveness for any salary or wage reductions that you imposed, and then the amount netted out is up to that amount you apply further reduction because of FTE reduction.
Right. And I think the other point I was going to make, Suhas, and I know you and I have talked about this in the past, is that it's not clear when they talk about, there's no reduction if either reduction in salaries or reduction of FTE employees is eliminated on or before June 30. And I think there's still a lack of clarity about what it means for that to be eliminated. My inclination is it means you have to restore the salaries of employees, but you don't have to necessarily pay them back for the period when that was reduced. And then as far as FTE, I actually don't know, perhaps you saw it, if the forgiveness application makes this clear, but I think there's still a question about, FTE by its very definition is as of a particular payroll period. It's not a snapshot. And so I'm not sure what it means. Does that mean your average number of FTE employees must be restored by the payroll period preceding June 30, coming after June 30? I'm not sure we know the answer to that.
Right. So, Ivan, one thing that the application does clarify how to calculate FTE as of February 15. The application, if I am reading it correctly, says that you have to take the payroll period that covers the date of February 15. So if it's a weekly, if employer is processing payroll on a weekly basis, then you would pick the week, which includes the date of February 15. And for that week, you would calculate the FT calculation and figure out what were the number of FTs on that February 15th. The application doesn't say anything about how to calculate FT as of June 30, but I'm assuming that for now that you would use the same process. If you have to compare apples to apples, then what I would do right now, in absence of guidance, is my employer would take the payroll period that includes the date of June 30. Whether if the employer is on a weekly cycle, and then calculate the FT of June 30, and then compare that FT number to the February 15 number. That's in absence of guidance. That's all I can do.
Right. Yeah, and that makes sense to me. That makes sense. Okay, so we may have jumped the gun a bit because the next whole section we talked about applying for loan forgiveness. And, a lot of these questions have been answered because we now have the loan forgiveness application that borrowers are going to have to complete. And so, as we've said, among other things, in addition to the application, a borrower is going to have to submit documentation verifying the number of FTE employees. It's going to have to submit payroll tax filings like its IRS forms 941, and then the equivalent state, either income, payroll, unemployment filings, documentation showing that the amounts actually were paid during the covered period, or we now know immediately following, on the next payroll date, immediately following the covered period. And then there's various certifications that have to be made as part of the forgiveness application about, the borrower's use of the funds, that it was used to maintain payroll, that at least 75% was used for payroll costs, and that not more than 25% was used for other covered expenses. And so, we now, as I said, we know quite a bit more about that because of the release of the loan forgiveness application. In general, lenders, once they receive the application for loan forgiveness, are required to issue a decision within 60 days. There is, at least so far as I know, there's no deadline per se for borrowers to submit an application for loan forgiveness. But, sort of all things being equal, you would expect that borrowers would want to submit it as soon as possible because they'll want to know with certainty how much of their loan is going to be forgiven. And if it's less than all, what is the amount that they're going to be obligated to repay. Certainly, you would think that borrowers would want to do that as quickly as possible when all the documents are handy and all the information is sort of is at their fingertips. And so you would expect that borrowers would want to do that just as quickly as they can. I mentioned earlier, I think toward the beginning of the presentation, that the SBA has said that all loans in excess of $2 million will be reviewed, and that's generally going to be in connection with the forgiveness application. So that review will take place once the borrower has submitted its forgiveness application to the lender. The lender will then turn around and submit the application to the SBA, and it's at that time that the SBA is going to review all loans in excess of $2 million. I had a question come up the other day for a client who had a loan over $2 million, and they asked whether, if they were wary of the SBA audit procedures, could they return some of the money so that their net loan amount was less than $2 million. And I think that particular strategy is not going to work because the SBA regulation refers to the original principal amount of the loan. So if you receive, $2.5 million and you try to return $600,000, that's not going to save you from an examination. And frankly, what we recommend is not to try to avoid that examination, but to try to be prepared for it by making sure that you have all the relevant documents, that you've thought through how you're going to use the money during the covered period to ensure that it qualifies for forgiveness, and so on and so forth, that you've had a board discussion confirming the need for the loan proceeds and why there's uncertainty and so on. And then lastly, I want to just talk briefly about what happens to any loan proceeds that are not forgiven. I think I said earlier that, depending on the amount that, whether employees have been furloughed, the number of, the amount of salary and wages paid out, et cetera, there may be situations, and maybe a very common situation, in which borrowers can't spend 100% of their loan proceeds during the covered period. They simply can't do it. And so what happens to any remaining balance after the forgiveness has been applied? The statute and the rules say that there is an automatic 6-month payment deferral, and that otherwise the loan has to be repaid within 2 years at 1% interest. So in effect, you'll have, after that 6-month deferral, you'll have 18 months within which to repay interest and principal on the loan. And again, obviously, it's only amounts that remain after forgiveness application has been submitted and hopefully approved. So I think. Suhas, were you going to add something? Yes.
Yeah, can I add something? So I want to emphasize one more time that to the extent that, let's say a borrower has received a loan, original loan of $1 million, and $600,000 has been forgiven. So $400,000 still stays as a loan, correct?
Correct.
That $400,000 stays as a loan, and if I'm not mistaken, the $400,000 have to be still used going forward for payroll costs and interest on the loans and rent. You still have to use it for those specified purposes. You cannot go out and then use that money to buy a boat or a car or some business equipment.
Correct.
Is that correct?
That's a great point.
Right?
Yes, that's a great point. And I think I said that earlier, but I think it's a great way to sort of emphasize the point, is that even if even if a loan is not going to be forgiven, you still are limited in how you can use the money. You cannot just use it for other business expenses. It still has to be solely for these covered expenses. So that's a great point. And For that matter, and I think this would be a fairly unusual situation. I don't know, Suhas, if you run into this, but I know of some borrowers that are less concerned with the forgiveness and just sort of want the money to make sure that they've got liquidity. And a question has come up about, if you never, are you required to submit a forgiveness application? Is that one way that you might avoid having to go through an audit, for example, if you just don't apply for forgiveness? And I think that's probably right. I mean, obviously, you'll lose out on the greatest benefit of these programs or these loans. But I think if you don't submit a loan application or a forgiveness application, that audit process never gets started. And as we talked about earlier, I think, in that instance, I think the only scrutiny that you'd really have to worry about would be a situation where there's really been a kind of overt or blatant, misstatement or misuse of funds.
I agree. I completely agree. And I think I kind of went over this slide of definition of compensation was to again emphasize that for the purpose of PPP loan as well as for PPP loan forgiveness, the definition of compensation is not Medicare wages or taxable wages, is the gross compensation that an employer pays to the employee. So I just want to make sure that when a loan forgiveness application is filled out, that the correct amount for each employee is entered,
Right. I think that's all that we have. We talked about this concept about the costs incurred and payments made, and especially now with some of the favorable guidance that we got in the loan application form. I can wait just a moment if there are questions. I don't believe that we've gotten any to this point, in the chat function or otherwise. But if there are questions, please feel free to ask away right now. Otherwise, as I think I also said earlier, this presentation will be available by video. We'll make a copy of the recording available and send it out to everybody probably within a day or so. And likewise, these slides will be available with that same email. So if there's any questions, you have both Suhas and my telephone and email information. Feel free to contact us at any time, and we'll be glad to try to answer any questions that come up.
Ivan, if I can just add a little bit more clarity about this covered period versus alternate payroll covered period, okay? So if an employer has a weekly payroll cycle or bi-weekly payroll cycle, employer at the time of filling out loan forgiveness application has a choice. The employer can use 8-week covered period starting from the date when the loan was received, or employer can use alternate payroll period, which is alternate payroll covered period is defined as 8-week period that begins on the first day of borrower's first pay period following the loan origination date. So if the loan is received, let's take an example. And this example I'm giving from the instructions to the loan forgiveness application. It says, for example, if borrower received PPP loan proceeds on Monday, April 20, and the first day of the first pay period following its PPP loan disbursement is Sunday, April 26th, the first day of alternative payroll covered period would be start from April 26th, and the last day would end on June 20th. So now, if an employer has as a weekly or bi-weekly payroll cycle, they have a choice of either using covered period or alternative payroll covered period. But that employer cannot use alternative covered period for non-payroll cost. Non-payroll cost forgiveness has to be calculated based on 8-week covered period. I want to make sure that we make this clear, that for non-payroll cost, there's only one concept, and which is covered period, which starts on the date when the loan is received. For payroll payroll forgiveness, an employer has a choice of either covered period or alternative covered period if the employer is on a weekly or biweekly payroll cycle.
Right, and as we talked about earlier, I think it's largely more forgiving and more favorable to borrowers than what we expected, with this ability to arguably include costs incurred prior to the period, as well as certain payments made shortly after the period, as long as they relate to either service performed during the period or to the other non-payroll or covered non-payroll costs.
Right. I think they've certainly provided the clarity on the back end of the 8-week period. There is a little bit more clarity required on the front end of the covered period or alternate payroll covered period. I believe we need a little bit more guidance,
Right. Suhas, let me ask you, I don't see that there's any questions yet, and so before we go, let me just ask you one question that I've heard a number of people ask, and I frankly don't know the answer to. I wonder if you do, is how should these amounts be treated on people's financial statements? Should the amount be treated as working capital, as a loan? How would you treat it when, in many instances, you're receiving a loan, but with the pretty clear expectation that most or all of it will ultimately be forgiven?
So, from GAAP perspective, this would be till you have received the forgiveness from the lender, it would show up as a loan. Now, this is a loan that can extend for 2 years. So, on the date of the financial statement, you still have more than a year to go. It would be long-term loan. Now, till you know about if you may have spent this money for qualifying payroll and non-payroll costs, so you have an expectation that you would be forgiven. I would footnote this loan saying that even though it is shown as a loan, the management expects forgiveness, but it has not yet been, it is still shown as a loan because forgiveness has not been finalized, okay? Now, once the forgiveness is finalized, then and let's say a part of the loan is forgiven, based on what I've heard so far, I would show it as a separate line item as other income and expenses and not offset the expense itself, because that can mess up all the percentages that an analyst would like to know. So I would still show the expenses for which loan forgiveness was received. I would show them as a normal expenses, and forgiveness amount, I would show it as other income and expenses with a proper footnote. But till you receive forgiveness, till the forgiveness is finalized, I would show this amount still as a loan. And depending on when that loan is due, I would show it as long-term or short-term,
Right.
But with the proper footnotes. Disclosure notes are important in this situation. Right.
Okay. Well, thank you for that, because I didn't know that myself, and that's actually a helpful clarification. Thanks to all of our participants today. Thank you for listening. And once again, you should receive all the materials within 24 hours. If you have any questions for Suhas or myself, please feel free to reach out to us. And thank you again for joining us today.
Thank you.